should say maybe the last session of banking operations. But yes, we have 1 more hour remaining, which we'll cover up in another class. This was module 2, which we had started off, but then due to some technical difficulties, we couldn't complete. Okay, so today we'll be completing the last few modules of your syllabus, your course outline, which is module 12, 13, and we'll also look at some small caselets on banking to understand how it is applied in real life. Okay, so module 12 for you holds in store what are banking codes. See, just like in your college, you might have a code of conduct, right? So you might have something which tells you what is the discipline, what is the rule book. For example, you have a rule book or you have a certain set of class policies which are laid out for you. So similarly, even in banking institutions, we have codes, right, which tells you what are the do's and don'ts in the banking sector, what is it that bankers or employees within banks need to do, and what is it that they should absolutely refrain from doing. So in terms of their rights, duties, liabilities, things are laid out, so we're going to look at that. Also, you're going to look at the Standards Code of India. Okay, so this is the Banking Codes and Standards Code of India, which is also in short known as the BCSCI. Okay, so we will be going forward and understanding more about it, and you will also understand some guidelines and fair banking practices codes. Okay, so when do you call a banking transaction to be fair, and how does the banker ensure that fairness is depicted in all their dealings? Today, the session objectives for Module 12 will be to get a broad overview of banking codes in particular, identify what these Standards Code of India guidelines are, and you will also be able to appreciate by the end of the session what are fair banking practices codes. So just to give you a small intro into this, banking sector in India is governed and regulated by several codes. I think even in the past, I have told you that there are already full-fledged acts in place which, take care of banking transactions, which ensure that there is a certain guidelines with which banks will operate. So we had the Banking Regulation Act, we had the RBI Act and all of that. But in spite of that, right, we do need a separate code of conduct as such, which will define what the banking sector should do and what are the guidelines within which they need to work. Okay, so banks in India are governed by and regulated by several codes, guidelines, and standards. Their basic objective being to ensure fair and trustworthy banking operations while taking care of customer interests as well. Okay, so at no point in time should you enact or should you, bring in such guidelines or rules which will put the customer in some kind of hardship or trouble. So while you are ensuring transparency and, disclosure of information and all of that to the customer, at the same time, you should ensure that there is absolutely confidentiality maintained in transactions between customers and others. So, where to draw that line? How exactly to ensure that while on the one hand you are facilitating the customer and protecting his interests, while on the other hand you're ensuring that there is safety and trustworthiness in the way they conduct their banking operations. So this is the BCSBI, which I was telling you a little earlier about, the Banking Standards, Banking Codes and Standards Board of India. Okay, it's also referred to in short as the BCSBI, and it's a autonomous body. So by autonomous body, we mean that they are not, held or they are not owned by any specific entity, and therefore you will ensure that there is no any what do you say, influence of that particular entity or body on the BCSBI. Okay, see, for example, if there is an institution that is owned by the government, right, then more so the government will have a greater say in how that institution is to be run, what are the guidelines, what are the do's and don'ts. And even if they are doing something untoward, something that is not good, even then, as an entity, as a board, you will not be able to do much if the government tells you that, you need to be partial to someone or you need to disclose information or something like that. Okay, so that will put the bankers also in a dilemma as to what to follow, and that fairness and transparency is not going to be there, right? More than that, the trustworthiness is being put at stake. right? And therefore, in order to avoid all these kind of political and other influences on the section, they have sort of introduced the BCSBI as an autonomous body, which is going to have its own trust and own board of directors, and it is going to take its own decisions and not going to be influenced by the decisions or orders or instructions given by anybody else. It lays down various codes and standards in order to ensure just and transparent banking operations. So, the main responsibility of the BCSBI is to lay down various codes and standards. So, codes means the rules or the guidelines, and standards mean certain benchmarks saying that you should always maintain this. There's no question of going this way or that, right? In order to ensure that there is justice and transparency in the banking operations. These are some of the guidelines given or laid out by the BCSBI. The first one is Code of Banks Commitment to Customers. Okay, so bankers, as soon as you establish the banker customer relationship, this particular guideline comes into being, that you are going to ensure that all kinds of duties that a banker needs to perform towards customers are being done righteously, and similarly all their responsibilities which are outlined in the Banking Regulation Act and as per the BCSBI are also followed. Okay, so it entails aspects such as disclosure. Okay, so when I say disclosure, I'm saying one is to disclose all kinds of banking information, new information, interest related or account related information to the customer on a periodic or a regular basis. So that is one aspect of disclosure. Another aspect is, I would say, not of disclosure, but rather of non-disclosure, right? Where they are going to ensure that there is strict confidentiality and privacy given to customers, and their account details are not discussed with anybody whomsoever. Okay, also it entails aspects such as transparency, which tells you that be transparent in your dealings. Don't undertake transactions on customers accounts which they don't understand, right? See, for example, a banker has a right to deduct fees, right, or certain charges for maintaining the customer's account. Right, maintaining means I have to record each and every transaction in your account. I have to send you periodic statements. I have to inform you when you guidelines or new information is available. So for all this, I will have some overheads as a banker to meet, right? And therefore, I am allowed by the bank, by the RBI, and by the Banking Regulation Act that for undertaking such services to the customer, for providing periodic statements, for undertaking banking or standing instructions from customers, or for just performing the role of banker, you are allowed to deduct certain maintenance charges from the customer. Now, while that is a right given to them, that does not give them a right to be non-transparent about it. Right? They cannot tell you or show in your passbook or in your periodic statement that in the end of December, you had something like 70,000 in your account balance. And when they showed you when you checked on 2nd of Jan, you found that there was only 69,500. So the fact is that you may have deducted 500 rupees as a banker for performing the overhead charges or overhead activities, standing instructions, etc. of customers, but not disclosing that or keeping the customer worried about where did I lose that 500, why did the bank deduct it, why is it not recorded in the books. That would lead to non-transparency. So please go ahead and mention in the accounting statement of the customer that the balance brought forward on 31st December was 70,000, deducting interest and maintenance charges of your account 500 rupees. Therefore, new balance is rupees 69,500. All right. So that will ensure that the customer at all points in time is aware of what is happening in his account. What are the transactions that are being affected therewith? Okay. Also, they have aspects on redressal of grievances. Yes, not to mention that customers, um, when they have this kind of a banker customer relationship, are bound to sometimes encounter such situations which could lead to grievances. Simple things. Okay, let's say for example you've given a check to the banker, or you've rather given a check to the customer, and that customer has gone and presented it in his bank, ideally where it takes around, let's say, 3 days for a particular account to get credited. Your customer complains to you after 1 week saying that I still didn't get my money on that check. So you have a grievance there. Your customer is bound to have got that money in 3 days' time. But if he's waited for 7 days and he's not got his money, then you're worried, right? Your credibility is at stake. So it is a grievance. You might want to address it. So the BC code also entails aspects on how to deal with and how to treat customer grievances, and how to provide a mechanism for speedy redressal of these grievances. The second code is the code of banks' commitment to small and micro enterprises. Okay, I'm sure we've all heard about MSMEs, right? And they are growing in a big way these days around you. Right, you might realize it, you might not realize it, but notwithstanding that fact, we need to understand that small and micro enterprises are on the rise, right? Thanks to Digital India and Make in India and all of those Startup India. So a lot of organizations, a lot of entrepreneurs are coming forth and starting their enterprises, and if they do have teething issues, financial issues, they generally tend to start on a micro or a small scale. Right, so in these enterprises, because I want more entrepreneurship in the country, the BCSBI code also has a commitment to these small enterprises. What is it? The code seeks to ensure fair treatment is vetted out by banks to small and micro enterprises. The code also addresses provisions pertaining to timely and sufficient credit to such businesses. Yes, why is this particular code given? Can't we just say that, banks' commitment to provide credit for business houses? Right? Small and micro enterprises are also businesses. But the point is that um, for large business houses, let's say the Ambanis, the Adanis, and all those people, Infosys, Wipro, these tall giants, any bank is willing to give credit. Why? Because those companies have credibility. They have huge profits in their financial statements, which they can boast of. And bankers feel a lot safer to lend money to these Fortune 500 and large companies, which have showcased their abilities to repay the borrowings also from the bank. But it is these small and micro enterprises who really need the money, right? They don't have any financial statements or a track record to show of the past. All they have is maybe a startup idea, or they have some one or two angel investors, maybe, of credibility, but that's all that they have. But in addition to that, they do need bank funds to start off with. So in order to ensure that this small and micro enterprises does not become a neglected sector, and that they are also able to avail a fair share of credit or funds from banks, this kind of a code of banks commitment has been released. Okay, whereby they will ensure that timely and sufficient funds or credit is available to these small and micro enterprises. Okay, coming to the fair practices code. Okay, we also read that there are a lot of fair practices that bankers need to adopt. And let's understand what this is all about and what are some fair practices that they exercise. What is it basically? Fair practices code is a set of guidelines issued by the central bank. So in India, it is the RBI, or the Reserve Bank of India. So these guidelines are issued by the central bank, and which must be strictly adhered to by banks and non-banking financial institutions in dealing with their customers. So this fair practices code is not something to be followed only by banking institutions because it has been released or issued by the RBI, but it is equally applicable to all non-banking financial institutions as well. Okay, if you are in the nature of lending and borrowing funds and accepting deposits, but you are not registered as a bank, then you become a non-banking financial institution. So even these guidelines apply to you. The Fair Practices Code is thus designed to address various angles of lending operations, including introduction of transparency in various lending processes and aspects related to customer protection. So, what is the basic focus of the Fair Practices Code? It is to look at lending operations through different lens, through different perspectives, through different stakeholders' eyes, and ensure that they are introducing transparency in these processes, so that they are not undertaking any insider trading, they are not engaging in practices which leads the customer to think that they are at risk at some point of time of the or the other. The key points in the Fair Practices Code, the first one is transparency and disclosure. Okay, so what does this FPC or Fair Practices Code say? Banks are expected to make available clear and honest information to customers regarding their products and services, also the terms and conditions and other dealings. Okay, so this is about transparency. One is about transparency, that make disclosures, right? Inform the customer. So whenever any new feature is being introduced in the bank, inform them about it. When you have created a new app, inform them about it. When there is something, when there is a certain protection level or a layer of protection that is added to customers accounts, inform them. If there are rising frauds of a certain nature, then also inform the customer. If you're introducing newer schemes, right, or if your earlier schemes have undergone a change and it will come into effect on a future date, then inform your customers about it, right? So inform. At the end of the day, whether the customer wants to take advantage of the information that you've given them, that is entirely the call of customers. Okay, let's say, for example, the banks inform you about a new service. Okay, let us say you started off as a salary account. All right. And as a salary account, there was a certain sum of money that your employer used to deposit or used to credit in your account every month whenever salary is due. So let's say you started off on a very modest scale. So let's say around 40,000 rupees is what you were getting. Okay, so that was what was getting deposited into your account month after month. From that 40,000, you used to withdraw some 10,000 for your petty expenses. Let's say you don't have any major responsibilities to take care of. So in 10,000, maybe your transport and once in a way a food or a party is taken care of. All right. So 30,000 used to remain in the account. So like that, month after month, 30,000, 30,000, 30,000 used to get accumulated. Now, let us say when it becomes, let us say something like 3 lakhs or 5 lakhs in your account, suddenly there emerges one new service which is available to you. Let's say, for example, the banker calls you and says, now you're eligible for a credit card service, right? You have pre-approved credit limit up to rupees 3 lakhs because you have 5 lakhs in your account. Would you like to avail this? So their job is to inform you that since you have a credible balance in your account, since there is a pattern to your expenditure and withdrawal, they are sure that if this kind of a pattern continues in the future, then you are definitely going to repay your bills also on time because you seem to have good balance in your accounts. So they will say, okay, we are willing to give you a pre-approved credit of up to rupees 3 lakhs or 2 lakhs or whatever. So what happens? It's a new service that has come about. So you might say, okay, why not? Right? Why should I go everywhere and use my debit card? Let me start using a credit card. So you'll say, okay, bring it on. They supply you with a credit card. Right? Now you are an esteemed customer who gets to use some credit. All right. So you are able to go and apply that and do your shopping, or you want to use it in a restaurant, you can use that. And that gives you facility in terms of convenience, right? Not carrying money anywhere or things like that. It takes care of that. Let's say again, a few months go by, a few years go by. Now your account balance is reaching something like rupees 8 lakhs, right? Or let's say rupees, or let's say in the meanwhile, you started an FD because you said, okay, I have anyway 5 lakhs in my accounts, 1 or 2 lakhs I will convert into FD. And then you're wondering what else to do. Then you say, okay, why don't I start a recurring deposit since I have a salary? So you're still wondering what to do. So you are thinking about starting an RD, but you're not too sure. Suddenly what happens when you reached around 6 lakhs, 7 lakhs, suddenly another service emerges, right? They'll say, all right, so we have assigned one wealth manager to you. All right. So what happens then? You're getting the services of one dedicated person called a wealth manager to you, who will tell you that since you have such large balances in your account, where can you profitably invest it in? Right. So they will give you the advice. Yes. Is there a question from anyone? Okay. Please save your questions for later. At the end of the session, I will be taking all these questions together. All right. Okay. So, a wealth manager emerges, right? And you are assigned a wealth manager who makes you a personal call and tells you that, I'm available in case you want any information on how your money can be better invested, or you want to know which are the various avenues which you can use for this purpose, then I'm there to guide you on that, right? So these are about services that they will offer you. So that service is available. See, like for example, I have a wealth manager assigned to me for the last 3 years. Okay, and every time the wealth manager changes, I get a new call saying, I'm your new wealth manager. I'm so and so. Any issues, anything you want to know, call me. Okay, but maybe in all of these 3 years, I might have used his services just once or twice. Right? It's up to me how I use it and whether I use it or not. There might be a lot of people who have never even used their services, but still that person is assigned. So that whenever you feel like using, just give them a call and say, yes, I'm in trouble. I want to know what tax saving schemes you have. Can you let me know? So your wealth manager will help you understand that, okay, if you deposit in these, maybe governmental bonds and this, that, then maybe you can save tax to some extent. So since you have so much balance, so much can be invested here, so much of risk you're able to take. So they will do all that background planning and let you know where you can use. All right. Also, if there are any changes in terms and conditions. See, for example, let us say you took out a loan. Okay, you have taken a loan for some, let's say, constructing a house. All right, you've taken a loan on for or home loan rather, as we call it, for constructing your house, and you took it on a floating scheme, floating interest scheme. Okay, so what happened is when you took it out, the interest rate was quite low. Let us say you were getting a home loan at 10% interest rate, right? And based on the market trends, you felt that the interest rates will further reduce, right? So you want to take advantage of that also while you're not delaying your construction. So you take out the loan at 10%, but later on, let's say after 6 months, the loan interest further reduces. Let's say it comes to 9.75%. The banker has to inform you that now your new loan percentage is going to be 9.5%. The terms and conditions, when you borrowed, it was 10% interest that you have to pay periodically, but now it has become 9.5%. Similarly, let's say after a year, they might call you and tell you, I'm sorry, the rate has gone up. Now it is 10.5%. Now, since you are the one who opted to go for a floating interest scheme, you might want to, you should have to pay 10.5. If you have a sense that, yes, markets are recovering, things are getting prosperous, inflation is getting under control, now the banks are going to be on a swift spree to increase the interest rates to control inflation, then you never know. So therefore, you might tell them, okay, now I want to change my terms and conditions and I convert my loan into a fixed interest loan. So at 10.5, they will freeze it there and say, okay, yours is a fixed interest loan. It will remain fixed forever now till the time you've repaid. Got it? So changes in terms and conditions also have to be informed to the customer, and any other dealings. For example, if you're suspecting any kind of a transaction in their account, inform them about it. If you are, you know, changing something in terms of maybe a loan repayment amount, or your maybe you've taken a loan and there is a default, right, that you've made in making payments of a certain EMI or of a certain amount, then that also, those dealings where they're going to tell you maybe through warnings or through certain reminders that this amount is still due and it has not been paid up. Okay, so all these kind of dealings also can be taken up with them. uh, Grievance redressal, I told you that bankers and customers, with when you establish that relationship, while there is a lot of loyalty and trust and all of that between the two of you, still, notwithstanding that, you can have grievances, right? Grievances means when you have certain troubles that you're facing with the banker, or certain things don't go as expected, or rather certain things take a very untoward turn, unpleasant turn, and you are not very happy with things, then you might have a grievance, right? And when you take that grievance to the banking system, you might want it to be redressed, or you want it to be addressed, rather, if you say, if you want to put it in more lighter terms, it is addressing that grievance and finding a solution, resolution to that. That is what's called a redressal. Okay, it's the duty of banks to provide a well-structured redressal mechanism so as to address complaints of customers in a timely and fair manner. So, when as a customer, let's say, you have a certain problem. Let us say you used your debit card at a certain place when you went shopping, and for some reason, the debit card was denied, and you didn't get, you weren't able to pay for that shopping. So you have a grievance here. You, in fact, maybe you went for that particular shopping on the strength of that debit card, saying that I can use my debit card and shop because I'm not carrying enough money with me. But unfortunately, when you went to the counter and started billing, you realized that, you were not able to pay through your debit card, right? And actually it's a catch 22 situation, because you need to pay up the money also, and then maybe, just to get rid of that situation, you must have paid through a digital wallet or something like that. But at the end of the day, if you have availed for a debit card facility from the bank and they have given you that, you have every right to ask them that when there is a sufficient balance in my account, why I was not able to use my debit card on time. The reason why I applied for a debit card is so that I can use it in such circumstances when I want to buy something at a store, or when I'm having dinner at a particular restaurant. I want to use it there. And if that service is being denied to me, I want to know why. Right? So when you have such complaints, you need to first of all reach out to your banker. So whenever you have a debit card, always, you must have noticed whether it's a debit or a credit card. Okay, if any of you have that, when you turn your debit card and look at the reverse, you'll always have some, toll free customer care number that is given over there. Right, that is your first point of contact. Right, so you will reach out to them and you will register this complaint that my debit card is not being usable. Look into this issue. So obviously it's going to be a call center on the other end. We can call up the call free number and tell them that, I have a problem over here and I'm unable to use my debit card. Can you please check and tell me what is the reason? So your first point of this well-structured redressal mechanism is to ask the call center executive at the toll-free number what could have gone wrong and what actually is wrong, which is why you are not able to use your debit card. So the person over there will ask you for certain information just to cross check whether you're the rightful customer and all of that. They'll check your mobile number and they'll check your bank account number and all of that, and then they'll say, okay, fine, now let's check into the issue. Then they will probably tell you, okay, by our records, we see that you have swiped your card here at this particular store. We'll say, yeah, I did, but then the money didn't get deducted. So what happened? Why was it not working? So then they will get back to the root cause and they'll say, okay, either you didn't activate your card, or, you didn't use your card for a very long period of time, which is why that card got cancelled on its own, or that card has expired and then you have to apply for a new card, whatever it can be. Right? So in some cases, the answer is right there, that the toll free number gives you the redressal, and then you are able to do the needful. Right, so you will tell them in that system itself, can you apply through your system itself for another debit card since the earlier one has expired, or if there is a problem with that debit card in activation, will you help me in activation over the call? So that is taken care of. Okay, so that they will do for you. Now, if, for example, you are using a credit card, it's not a debit card, it's a credit card, and that also you could not use for some purpose, right? You were trying to pay for maybe a certain client dinner or something at a restaurant, and your card got denied. Again, it's a very, very sad state to be in. Okay, so in such situations also, when you call for this toll-free number and they'll say, no, you have, let us say, your pre-approved credit limit has not been reached, but then you have still been denied, or your credit card, request was denied. And let's say they are not able to help you. Right, the call center executive or that toll-free number tells you, yes, sir, we are not able to find out what is the reason why that particular card was denied access. So then you'll say, okay, escalate my issue then. right? And sometimes they themselves will initiate and say, I'm sorry, I'm not able to find it. Can I transfer it to the relevant department? So that is one escalation mechanism, right? Where at the lowest level, they are not able to address your issue, it will go to the next level. At the next level, you explain the problem. Again, they'll ask for certain checks and balances. They will ask you, when did you last use your card? At that time, were you able to swipe? What is the expiry? What is your card number? What is the CVV? This, that. They will ask you for 10 things. And then let's say after all that, also they are not able to figure out. They'll say, okay, can I pass it to the bank manager? Would you like to speak to them? Right? Or would you like to speak to my manager? So what happens is this is escalation mechanism. Right. So what happens? You should have a well structured system through which you can go and you can complain when you have maybe a credit card or a debit card or any issue for that matter. Right. And the reason why these escalations happen is so that you get your complaint sorted out in a timely and in a fair manner. Okay, without much trouble to you yourself. Now, the question is, do I always need to go through this mechanism of calling up the toll-free number, speaking to a call center executive? And how does this work with maybe senior citizens account? Right, these are people who might not be very comfortable, making calls to toll-free numbers. Somebody on the other end is answering my call, asking me everything about my bank account. I'm not feeling safe. So how do I address this issue? If I have a banking complaint, do I have to go through this? No. If you're more comfortable going to a bank and addressing that system, please visit your bank branch, visit the bank manager. If your complaint is really that big, if the person across the counter is not able to help you, then please visit the bank manager. The bank manager will try to understand your issue in a proper manner and try to sort it out for you. And if they are also not able to, let's say for example, they give you a lot of assurance that it will be sorted and we'll tell you how to do it and we'll get it done, let's say in 2 days time. For some reason that 2 days is going on as 2 days, 2 days, 2 days. Now it's almost 2 weeks since your complaint has been raised and the bank manager is unable to do anything about it. Now you can go to the website. You can take somebody's help. Go to the website and file a complaint on the banking ombudsman. Okay, ombudsman is the customer grievance cell of banks. Okay, so in the banking ombudsman, it is a particular portal where customer complaints are registered in the against the banking system. So whatever the nature of your complaint, if you feel that within a reasonable time it has not been resolved through your known redressal mechanism, then you can register it there. Once it gets registered in the banking ombudsman, it gets into the central system, right? Where your bank's complaints go directly to the RBI or to the central bank headquarters, and there they will try to redress your complaints at the earliest. Because once you've reached the banking ombudsman, then it is a serious affair. Then people cannot sit on your complaints. They have to address it as quickly as possible. Privacy and confidentiality. Banks are also bound by a duty to maintain confidentiality of data provided by customers and not to disclose it to third parties without the consent of the customers. Okay, so this is the duty of privacy and confidentiality, where the bankers, we don't need to specify to them. It is part of their policy that if you are maintaining an account with them, you are not supposed to disclose that information to any third party without the consent of the customer. Right? So if I am the customer and if I've gone to the bank and opened an account, I might have opened it with, let's say, 100 rupees or 1,000 rupees, while maybe some of my family members may be having wealthy bank balances. They might be having something like lakhs of rupees. This does not mean that if my spouse or my child or my parent goes to the bank, the banker will say, but oh, you my God, you have lakhs of rupees, but then your son just opened their account for 1,000 rupees. How's that? Why do they not have bulky bank balances? So it's not their job to disclose it to anybody. Even if they are your family and friend, they should not disclose anything about your account without your consent. Okay, so this is one thing. And also all kinds of data that is provided to the customers or provided by the customers. Let's say, for example, the customer tells you, I want a loan, right? I want a loan to purchase a home. Now, this does not mean that you're going to inform the rest of my family because we all, have a banking account with the same bank. They should not go ahead and tell my fair. And that why did your child go for a loan when actually you have enough funds in your account to actually give him and he can build a home without a loan? So that's not their problem, right? If I want a loan, I take my loan. Your job is to give me a loan and keep quiet about it, right? So as a banker, they should maintain confidentiality and should not disclose it to third parties without my consent. However, the only exception being that the banks are permitted to reveal the information only when required by law. Okay, so let us say there's a law intervention that's come in and they're suspecting some kind of transaction in my account. There is an unnatural debit or credit to my account, or the pattern of transactions in my accounts have undergone a sea change from what it used to be over the past few years. Then the law, that is the governmental organizations or the banking system, might want to investigate into your case to see whether there's any money laundering that's happening, or whether there is any kind of insider thing, or whether you are engaged in any kind of illegal activity. So for that, the your accounts may be your information might be asked by the central bank or by anybody else, just to investigate into what is the nature of transactions, where are those extra sources of money coming from, and things like that. Okay, or let us say, for example, you as a businessman have filed for bankruptcy, okay, insolvency, saying that I cannot pay back my debts to anybody because I'm in suffering huge losses, right? So I don't think I'm in a position to pay any of my debts, whether it is to you as a banker or any of my creditors, right? If I've gone ahead and borrowed money, or if I've purchased goods on credit from anybody, then I don't think I'm in a position to pay them back, because I'm not going through a good patch and my financial soundness is questionable. So when you file to the company's registrar saying that I want to file for bankruptcy, or you go and inform the law agencies that I want to file for bankruptcy, then the law might initiate an investigation saying that what are your bank accounts? Please give us all your banking details. For example, how many banks do you have an account in? What is your bank account number and all that? And if these people, the law enforcement authorities, contact your banker and say that so and so has filed an application or a petition for bankruptcy, and therefore as part of the procedure we want to know how much money is there in his account. So over here the banks are allowed to reveal to the legal authorities how much money do you have in your account, or what is the nature of transactions. Okay, so in these kind of situations, without even consent from the customer, you can be asked to share information. Fourth is interest rates. Okay, so the RBI, which is of course the central bank and the apex bank in our banking system, it has the authority to issue guidelines on interest rates. Okay, in fact, all the interest rates that you see in your banks, whether they are for deposits, whether they are for lendings, and whether the changes that are affected on them periodically or every now and then, is thanks to RBI, who is the authority who has the power to change or give guidelines on interest rates. So the RBI, obviously being at the apex or the top of the pyramid, can have an entire view of what is happening in the country and throughout in all the banks. So when they take a check on the financial or the economic system, economic status of the country, and they sense, let us say, an inflationary tendency. Inflationary tendencies happen when there's too much money in circulation, and everybody has so much money with them that things are getting more and more expensive, right? Things are getting expensive and customers are buying because they have money with them. Businessmen are going on raising the prices. So what is happening? People are spending, lots of money is there in circulation. Businessmen going on raising the prices. It's not looking good. So much inflationary tendency, when there's so much money in circulation, value of money is going down. So RBI has to check it immediately. So the RBI will say, oh my God, it's becoming a galloping inflation. I need to bring it down to a creeping inflation. So when you have a creeping or a crawling inflation, that is good for the economy. So the RBI has to check that inflation. So how does it check the inflation? By introducing what is known as a policy, a monetary policy, wherein it's going to say, I am going to control the money supply. I have to suck up or I have to take away all the extra money that is there in circulation. I need to curb the spending habits of people. I need to stop making people spend too much. And if I have to do that, I have to ensure that they have lesser money in their hands. So how do I do that? So the RBI will think a lot and say, all right, so now let me change the interest rate on deposits. Earlier, a savings bank account used to give 5% interest rate. Let me for some time change it to, let us say, 8% interest rate. So what happens from 5%, the interest rate went up to 8%. If I am one of the persons in the economy who's having lots of money, what will I think? Oh my God, 3% increase in interest rate. Let me go and deposit all my extra money in the bank. Right? Any logical person will say, wow, if interest rate has gone up by 3%, I want to take advantage of that. So you go and you deposit the money in the bank. So like me, there might be millions of other customers who will say, yes, even I want to go and avail that 8% interest that banks are giving me. So what happens? Automatically, all your extra money is getting into the banking system. From there, the RBI will take it up from there. So what happens? Automatically, there's lesser money in our hands. Lesser we spend money, and price control will automatically happen. So RBI has got these kind of powerful tools which can, expand or contract money supply in the economy. And he can do this very easily by just manipulating the interest rates. All right. It must ensure that these are just and transparent. However, see, whenever there is a change in these interest rates, they are transparent. In fact, if you go to any bank, right, you visit ICICI Bank, Axis Bank, IDBI, IDFC First Bank, or you go to Axis Bank, or you go to Deutsche Bank, RBS, wherever you are going, um, you will identify that maybe, they have displayed at strategic locations interest rates on various accounts. Right? Sometimes they send you over mail saying that our rates and interests have changed. So for your information, this is it. Right? So they are being transparent whenever changes are happening so that you as a customer can take an informed decision whether you want to take advantage of those changes or not. Banks are required to inform their customers clearly about the interest rates applicable on various banking products. So they cannot say that, oh, if let's say as a customer, I go to them and say, I want to open a fixed deposit account, of rupees 1 lakh and for a period of 1 year. The bankers cannot say, all right, we will, create that fixed deposit for you for rupees 1 lakh for 1 year. Thank you very much. They have to tell you, okay, if you're depositing it for 365 days, then you will get an interest rate of 7.25%. However, if you are going to invest for 380 days, then we are willing to give you 7.75 or 7.9% interest. So what happens? They are going to tell you about various kinds of schemes. Right? Or they might tell you that if you have so much, do you want to, only withdraw the interest at the end of every year? And do you want the principal to continue in the fixed deposit, or do you want to withdraw the whole thing after a year? So all these things, you have to discuss the pros and cons about it to your customers, the interest rates that are applicable to different time periods. All of this should be clearly informed so that as a customer, I can take my decision. The banker's job is not to influence my decision. His job is only to give information. Right? They can only tell you these are the rates for these time periods. Now, as a customer, it is my call whether I want to invest it for 45 days, whether I want to invest it for 4 years. There, the banker cannot influence me. Okay, so that is how it works. Loan recovery practices. Okay, there are also fair practices codes for loan recoveries. Bankers must diligently follow ethical norms in the practice of recovering loans. Okay, so what does this mean? Let us say, for example, I've taken a loan. Okay, I've taken a loan for what purpose? To start a business. Okay, startup loan. Something like 5 lakh rupees I've taken from the banker because I had one or two angel investors also with me, and I had a very promising idea which at least the banks felt was a little promising. So they gave me this loan of rupees 5 lakhs. Okay. I went and I immediately purchased some office furniture. I purchased one small vehicle for, quick travel, maybe a small scooty or something, which I purchased so that I can immediately rush to the market to buy things, or, to go and meet clients and customers and things like that. I purchased one small bike. So like that, I have spent that money of 5 lakhs on various business purposes. However, the business didn't pick off as expected, right? It did not take off on a very positive note. And though I met a lot of clients and they sounded very promising and all of that, none of them really gave me business. Right? All I had was maybe one or two clients who gave me some small business, and their payments are not due yet. Their billing period is not over. So I have not received the monies from those particular client, while actually my loan has become due. My EMI has become due for payment. Due to these kind of teething issues, I'm unable to pay the loan. Now, if I'm unable to pay the loan, all right, I'm not saying that the bank should be empathetic with me and should come and say, oh my God, you're having losses in your business. It's okay if you don't pay EMI. No, this is not what I'm saying. As a banker, you have your terms and conditions, you have your rules and guidelines for loans and how customers deal with loans, right? So you have your idea about that. But that having said, you are lending to an MSME, right? And they have run into some financial troubles. Now, when you have not received a certain EMI on a loan, your first job is to write a reminder to the customer, whether you're using email or whatever it is. Write a reminder telling them that your EMI was due on, let us say, the 25th of November, but today is the 29th or 30th of November and the payment is still due. Right? So please treat this as a reminder from us so that you come to the bank or whatever means you have, that the EMI is paid off or settled as soon as possible. Fine, you got one reminder. Okay. Now again, they waited, for let's say 5 days, 6 days, no money has come in. Now they will send you maybe a second reminder, right? And after another 5 days, they send you a third reminder also. Unfortunately, you are not even informing the banker that you have run into troubles and they're not going to be able to pay. You are just, pushing your luck harder and harder and saying, okay, at least I will be able to pay, when he makes the second reminder or third reminder. But you've not informed the banker anything, unfortunately. Now, what does the banker do? Now, after the third reminder, he might send you a warning letter, right? Now, the mild tone is vanished. He tried it, right, for the last 2 weeks. It's not working. Now he might change the tone and give you a warning, right? Saying that if the loan EMI is not paid in the next 2 days, then we might have to seize the collateral or sell away any collaterals that you have given. Or we might have to forcefully extract money from your bank account or something like that, right? Or we might have to sell off the asset that you gave us. Now what happens? Now you're in trouble, right? Warning letter has come. Now, after the warning letter also, if you don't react, if you've given a collateral, let's assume they sell it. If you've not given a collateral because you're a small startup, they might send recovery agents, right? Who will come there in person and warn you and threaten you and say that you better pay up. If not, I'm taking away all the furniture that I see in your business place. I'm taking all this and I'm recovering my loan. So what happens is you are changing your modus operandi of loan recovery as and when the customer is getting tougher for you to handle. But instead, now this is an ethical and a proper diligent practice that you are following. But let us say for some reason, the banker, the MSME fails to pay their loan and it has been, due for the past 1 week. And without sending them reminders, without giving them a call, without sending warning letters, suddenly you're sending recovery agents telling them, go and pick up whatever is in their office and come. So they come and create a lot of havoc and they yell in front of your clients and customers. They pick up your computer and printer and things like that and they walk away. Now, not a very nice thing to happen, right? So that means you have not followed ethical norms in recovering your loans. So the loan recovery practices, fair practices code tells you that you must follow ethical norms in recovering your loans. They must make deliberate attempts not to engage in harassment of borrowers and not to indulge in undue influence. Right? See, what is undue influence? Undue influence is a situation wherein, a person who is in a dominant position is able to suppress somebody who is actually in an inferior position. Okay, like in this case, because the banker has lent you the loan and you are the borrower, the banker is in a dominant position, right? He can dictate terms to you. But because you are the borrower, you said, I need money, can you give me money? So you become the suppressed class. So the bankers cannot engage in undue influence, right? Saying that because I gave you the money, you have to do this for me. Because I gave you the money, send your goods free of cost to our banking staff or something like that. That is undue influence. Okay, and of course not to engage in harassment of your borrowers, as I told you, sending recovery agents or pulling up things from your office and taking it back, saying that you've not paid your loan, so I'm going to use up, or I'm going to take away your bike, or I'm going to take away your furniture. No, that's not done. Okay. Okay, so those were the fair practices code and the BCSBI codes that you went through. Okay, we have understood the guidelines and codes for the conduct of banking activities. Additionally, the Banking Ombudsman Scheme, this is what I was speaking to you about a little earlier, provides an effective mechanism for addressing complaints that customers may raise relating to banking products and services. Let's say, for example, uh, banker gave you some information about a certain product or a new scheme that has come about, right? And you go and you're influenced by that scheme, you're attracted to that scheme, and you go and invest in that. What happens is, after you invested, you realize that that scheme is not paying off as expected. Right now, if you go to the banker and tell him, I invested in this scheme because you told me that it's going to give me this percentage of interest. Let's say the banker tries to get away with that. He says, no, but did you not read the document before you signed it? In the fine print, I've mentioned that this has some amount of risk in it. You might get this rate, or there might be certain periods when you might not get this interest rate as well. Right? While those things were not disclosed to you at all in the beginning, you were given a promise of assured interest rates at the time you went for that investment. And later on, it appeared to be a scam wherein, the banker is not paying you as expected and your money is just getting blocked up. You're not either able to withdraw it away from the scheme, neither are you getting returns as promised by the scheme. Now, you can go and register your complaint in the Banking Ombudsman Scheme, and there will be an effective mechanism where they will help you to address your complaints in a proper manner. And they have timelines over there. Okay, once your complaint is submitted into the Banking Ombudsman Scheme, within a period of 48 hours, you should be able to at least get an acknowledgement that yes, your complaint has been registered over here, and that we are looking into the issue and very soon it will be sorted. Okay, and then ideally within a period of a week or so it should be sorted. Okay, considering that there are a large number of complaints filed through it, uh, within a week's time maybe you should get a clear answer from them and your grievance should be settled. This is a small quiz for your self learning. Okay, so if you have listened to the class well, you should be able to answer this. Okay, so on the left hand side, I've given you certain statements and you should be able to link it with those on the right hand side. So there's banks' commitment to their customers. Okay, so the bankers commit to their customers that they will be a duty of disclosure and transparency, right? Also, in case of loan recovery practice, there should be a deliberate attempt not to harass your borrowers. Interest rates, the RBI is the authority to issue guidelines on interest rates. Banks' commitments to small and micro enterprises is they will ensure fair treatment of small and very small businesses. And the Banking Ombudsman Scheme is a mechanism for handling customer complaints. The session outcome. All right, by now, I'm sure you've learned a little bit about the banking codes. You've also understood that we have the BCSBI, which is set up as an autonomous body to ensure that there are certain guidelines in place so that fairness, justice, and transparency prevails in the system. Okay, also the Standards Code of India guidelines is available, and there is a fair banking practices code for not just loan recovery but also for interest rates and other things, right? So there can be a lot of factors here to take care of. Okay, so that was module 12 for you. Okay, if all that was clear, I think let me see if we can take a short break. No. Okay, it's 9:54. Take a 2-minute break and come back. Okay, you can maybe just drink some water, whatever, and come back. Okay, 2 minutes of break. After 2 minutes, we will resume with module 13. In the meanwhile, those of you who are not going out of the meeting, if you have any questions or queries, you can ask. All right, I'll take all of your queries together then at the end. No worries. All right, we shall continue. All right. So module 13 is about Bankers Book Evidence Act and the law of limitation. Okay, so certain interesting things about, evidences and what if the court calls upon for certain, action, how to deal with that, and especially understanding the law of limitations and the way it acts. Session objectives. By the end of the session, you will get an overall insight into the Bankers Book Evidence Act. So that is another act dealing with, bankers, books, and all of that. And you'll also obtain a deeper understanding of the law of limitation. What is this law? How is it applicable in the banking sector? Okay. Two distinct legal frameworks that affect banking and financial affairs in India are the Bankers Book Evidence Act of 1891 and the law of limitation. Okay, so if you notice, this particular act is more than 100 years old, right? And we are still referring to it, we are still using it in a big way. I think it speaks volumes about how important this act is, and the provisions of that act, how current or how presently it is being used in India. Okay, so you have the Bankers Book Evidence Act and the law of limitation. So let's do first things first, the Bankers Book Evidence Act. Okay, the Bankers Book Evidence Act is it's a law that was enacted in India, of course, way back in 1891, when maybe banks had just started their practice, right? When bankers were still understanding how to, conduct banking business. In fact, if you notice, on this date, even the RBI was not set up, right? The RBI Act is dated 1935. Okay, so if you look at that, according to that, 1891 is more than 40 years before the RBI was set up also. So way back, right? So I think during the British regime and all of that, this particular Bankers Book Evidence Act was set up, and the RBI, of course, okayed it once it became the apex banking structure in the country, and went through the act and understood that the act made a lot of sense and wanted to continue with it. That's when we still continue with this particular act. So it was enacted in 1891, and it deals specifically with the admissibility of bank records and documents as proof in legal proceedings. See, what do we mean by legal proceedings? Legal proceedings means any kind of matter that comes for hearing before the court, and which has a definite, what do you say, a defense and a prosecution. A definite case has come into being where either a complaint has been filed, or there is a certain grievance, or there is a scam or fraud that has happened, or whatever the case might be. Right? So when such legal proceedings involving the banker, right, I'm not saying that the banker is engaged in the fraud. I'm saying that if you have any grievances or you have any kind of complaints as a customer that you may have raised on the banks, right, then the courts might come up and tell the banks that even they need to be present in the court when the customer's hearing comes up. And at that point of time, the banks might want to, the court might want to look into certain banking records, just for the sake of ensuring that everything is in place. Okay, so what are these books of accounts, documents, and records which are permitted to be admitted for legal proceedings? So all of that is discussed in this particular act. Example of evidence. Okay, so what is actually happening over here? Okay, cash, a customer is giving some cash to the bank, right? So we are depositing the money in the bank. Now the banker gives an acknowledgement of that deposit with a receipt, right? See, now for example, let us say you are making a transaction over GPay. GPay obviously is linked to your own bank account, right? I'm sure everybody knows this. Okay, now let's say through GPay you are making a payment. Let's say a simple donation you are making to some charitable institution, which is working for a social cause, which came up to you and said, okay, we are in dire need. There is a patient and they are in need of medicines. Please pay up something. So you immediately GPay based on the scan. Now, what happens after you make the payment? Immediately you get a transaction record, right? It has a unique transaction number or an invoice number, right? And it has how much money you have paid, to whom you have paid. All that comes in appears on your screen. So that is your transaction receipt, right? Which says that yes, we have just now made this kind of a transaction, and this is the money that has been deducted from your account, and it has been paid to so and so, right? So that is a receipt. That's a digital receipt. So you can take a screenshot of that and maintain it, or it will remain in your GPay. You go back and say, I want to check my balance. Over there, it will show you the last payment you did was a donation to this charitable institution, so much that you paid. So that will remain there, right? But if you go to a bank and you visit the bank and there you make a payment, let us say you want to pay up something to a person, or you want to deposit some money into a bank, what happens? You'll have to fill in what is known as a pay-in slip. Okay, so in the pay-in slip, you mention that, I want to deposit, in my own name. Okay, so if I'm going to deposit it into my account, I'll enter my name. If I want to deposit in somebody else's account, I will mention that person's name, right? And then I'll mention the account number in clear terms. What is the account number of that person? Then I will also mention details of whether if I'm giving cash, then how many currency notes of what denomination, right? Then I'll write the amount in words and in figures. I will date that instrument properly. There's one small, perforated column, and there's one larger deposit slip. So what we do is we have to fill in the same details in both parts, right? And we have to sign at the bottom of it, signature of the depositor. So we need to sign there also. After that, we take this entire form and we have to give it across the counter. What do they do there? They will check whether both the parts contain the same details. That is very important. If there is any discrepancy in that, they will say we are not going to accept this deposit form, because let's say on the small portion I've written I'm paying 10,000, and the larger portion I've written paying 8,000. Now they'll say, no, this is not possible. You have to have the same details on both ends. So you have to hand over the entire form to them, okay, with the same details and signed also on both the copies. If the banker is convinced, now once they see, okay, it is rupees 10,000, and this you are giving as 2,000 rupee notes. So what will the banker will check once, they'll say, okay, give me the money. So once you give the money, they will check, okay, you have given 5 notes and they are of 2,000 rupees each. They will check whether the notes are genuine. And once they find that, then they will stamp on both of them. Can you see on this receipt that I've put in here? There are some stamps, right? There's a blue stamp. Then there seems to be what appears to be a red colored stamp. Okay. And there's also a signature. So, okay, signature of that banker or signature of the depositor is there. So once it is stamped, then that means the banker has acknowledged that you have deposited the money with them. Okay, so then after it is stamped on both the smaller slip and the bigger part, it is stamped on both, and then the banker retains the big portion with them and the small part is given to you. So you can carry that with you as evidence for having deposited that money in the bank. Okay, so let us say after 2 days, 3 days, if that money is not reflecting in your account, what you have deposited, and you go to the banker and say, I deposited rupees 10,000 in my account and it's not showing. You'll say, okay, where is the acknowledgement? Where's the receipt? If you show the small slip to them, which has been stamped by the banker, then they know it's genuine. If there is no stamp, they will say, you just filled in the deposit slip and walked away with it. We have not stamped it, which means you didn't give us the money. So you have to ensure that when you're accepting that acknowledgement or that small slip, it is stamped by the banker. So that stamp is a final conclusive evidence that they have actually taken the money from you. Okay. So if you show them that stamped acknowledgement, then they will go and check for the bigger piece of that to see whether any notes or comments have been made on that or why that amount didn't get reflected in your account. They will go back and check the records and then they will do the needful. Okay, but this is how receipts are given for acknowledging various transactions. So this deposit slip can be used by you as an evidence in the court of law, right? So for example, if that money doesn't get deposited in your account and the banker says, no, you didn't hand over any such money, you'll say, all right, so I'll go to the court and there I will go and present this acknowledgement slip saying that I have given you the money and you have not deposited. Now, because it has the date, because it has the money and everything, and you have also access to your periodic statement where the money is not reflecting what you deposited, you will say, okay, I will use this in legal proceedings against you. So these acknowledgements also are proper, uh, what do you say, accepted proofs in the court of law. Okay, the banker makes a proper entry in the books. Okay, if you show this particular deposit or this deposit counterfoil, then the banker will make the proper entry in his books, which are maybe the cash book and then your bank account and his own books of accounts. All that is being done by the banker. What is the scope of the Book Evidence Act 1891? It applies to all the banks in India and their books of accounts, ledgers, and all other documents. Okay, so the scope means basically we're looking at the geographic territory and also what is the scope and coverage of that particular act. What all does it include, exclude? So, as far as geographical territory is concerned, it applies to all the banks in India, they're saying. Okay, so it's not that, I'm a commercial bank, it applies to me, or I'm a regional rural bank, it doesn't apply to me. It's not like that. Every bank, whether you are commercial or developmental or cooperative bank, whatever kind of bank you are still bound by the Bankers Book Evidence Act and their books of accounts, ledgers, all other documents. So whatever are the fair documents that you are maintaining, like banks are supposed to maintain mandatorily certain books of accounts. Okay, so that will be their ledger accounts, their bank reconciliation statements, then they will have their, vouchers and deposit receipts. They will have, journals. So all of these are important books that they should maintain and they are kept that are kept during regular operations of business. So we're not talking about one-off transactions. Regularly for banking transactions, whatever records and books that you maintain, all of those are acceptable under this particular act. Okay, so whether they are your ledger accounts, whether they are your banking invoices, whether they are passbooks, whether they are deposit slips and other counterfoils, all of these are regularly used by the bank in all their transactions. So they are all acceptable under the Bankers Book Evidence Act. Admissibility of bankers' books. The Act has provisions for the admissibility of certified copies of all entries in the books of the banker as evidence in legal matters. The banker's books are considered as primary evidence for all transactions that are recorded there. Okay, now if there is a court proceeding, if there is a legal proceeding, let us say as a result of some customer's complaint. Okay, like I gave you in the previous slide, a customer has deposited a certain sum of money. Let us say he is a person who doesn't know much to use online banking and transactions. So he's actually gone to the bank branch and given his money, actual currency notes to the banker. He's filled in the deposit slip. He has a stamped counterfoil which has been given back to him, and he's given the money, but then that money is not reflecting in his account. Now, what will the court say? Court will say, all right, you seem to be having an evidence here. Fine. Now let us check with the banker. So he will call the banker. Now the question is, the banks deal in so many transactions per day that they will have huge ledgers of each customer and several pages dedicated to that customer. Then once those books are over, they will replace with new books. So they have stacks and stacks of physical files also with them. Now, whenever the court calls upon for such kind of record checking or investigation, the banker is not required to come with all those bulky books or not surrender all the ledgers to the bank, to the court. One, because it is cumbersome and it is time consuming. Secondly, also the fact that just because the bank wants some evidence, the court needs some evidence, it doesn't mean that the banking activity is going to come to a standstill. It doesn't mean that the bank will close down. I have still other customers needs to meet. I still have to use those books on a continual basis. There'll be more customers coming to make their deposits. If I'm going to surrender all my ledgers and accounts book to the court, then where should I make the entry for the other new customers who are coming in and transacting on daily basis with me? So therefore, the act is telling the banks that you don't need to submit any of your books as such to the bank. You can just give us certified copies of all entries in the books of the banker. So if, for example, a customer A has come to me about this particular complaint, I can tell the banker, all you need to do is take copies of A's account. Give me Xerox copies or whatever of A's account. Okay, for the last 2 months or 3 months. Let's say this particular transaction happened in the month of October. So the banker will say, for the last 2 months, October and November, I want the entire ledger of, Mr. A. Give me copies of that, all deposits, all withdrawals that have been happening from this particular account, any loans availed on this account, all whatever books or transaction records you have of Mr. A for the last 2 months, I want you to submit that. So they'll take out copies, photocopies of that, and whoever is the bank's, what do you say, the bank manager or anybody who is certified by the bank. Maybe it can be the bank's accountant, anybody, okay, who is in charge of maintaining those ledgers, can be that as well. So the banker's bookkeeper or the banker's accountant or the bank manager, any of them can sign saying that yes, this is the copy of A's account. So you're sort of certifying that, authorizing that whatever copy I'm sending to the court, these are the authorized copies. I've gone through them and I've confirmed it. So as a bank manager, you will sign on them as showing the certified copies, and you can take that to the court of law. Okay, and the banker's books are considered as primary evidence of all transactions. So first thing that the banker is going to do, the court is going to do, is check the banker's records. and say that, okay, on so and so day you deposited so much, on the next day you've withdrawn so much, on this day you've done this much. So what happens? All your transactions are going to be checked one by one, and then they will come to whether that discrepancy actually exists. So maybe it's showing in the books of the banker, but unfortunately they didn't put it into the bank. It's not reflecting in your passbook. So somewhere they have missed that entry over there. So this is where, that when you make the double entry, it has to reflect on both the parties. Right, but let's say unfortunately it's showing in the bank books but not showing in the cash books, or vice versa, in which case they forgot to make the entry in your account. So therefore it's not showing in your passbook, it's not affecting your balance, but in the bankers books, because they have added it over there, their balance is showing correctly inclusive of 10,000, but your account is not showing that 10,000. Got it? So this is how the court can come to a what do you say, not conclusion, the court can judge what is happening on that account. Certification of entries. It is required that all entries in the banker's books are certified by a responsible bank officer. As I told you earlier, when they were taking out copies of, certain ledger accounts or certain transactions to be given or produced in the court of law as as an evidence, then you have to substantiated by the signature or the certification of a responsible bank officer. So it can be anybody who has maintained those books of accounts, or it can be the bank manager or officer who says, okay, since I am in charge of all transactions happening in this bank, I shall sign it across. So when they affix their signature on it, it is actually like they are acknowledging that, yes, this is reflecting all transactions that happened on this account. Okay, so that is like an evidence for that. Notice of inspection. The Act also contains a provision which requires that any party who wishes to use the bank records as evidence must give an advance notice to the bank, thereby allowing the bank enough time to present the intended documents in court. Okay, so if at all on receipt of a customer's complaint, the bank, the court feels that they want to investigate into the matter further. Right, so the court feels that yes, the complaint looks valid and this customer did deposit a check in so and so time, but unfortunately that particular check did not get cleared, or it's taking more time than necessary, or let's say the banker just refused to have obtained that check and so on, and the court wants to investigate. So the court is calling upon this particular banker to submit their books, okay, submit their bank records as evidence as to whether this particular transaction actually happened or didn't happen or whatever it is. In such a case, the court has to give the bank an advance notice saying that this particular case is coming up for hearing on the 5th of December. Therefore, by the 3rd of December, we request you to hand over certified copies of Mr. A's ledger account and cash account and any other transactions that he may be having with your bank. So what happens? I have given a good 3 days time to the banker, telling him all I want is certified copies. Take photocopies of Mr. A's account for the last 2 months and submit it to the bank. So what happens is it gives the banker also some breathing time. He can go back and check where all his accounts are there, what all kinds of accounts he is holding, take photocopies, certify it, check whether they are true, whether all transactions are recorded or not, have a proper eye on that, and then they can go and submit it as evidence. Right, it's not like how it happens in the movies, right? Suddenly they will come in and they will say, okay, take this book, take that book, let me see this, let me see that. It's it's not that dramatic in real life. Okay, if the court wants to check something or establish the legality of something, uh, it's done in a very empathetic mode, where they tell bankers that yes, we also understand that you have a regular running business with people flowing in traffic, people coming and going, visiting the bank branch during the banking hours, so you get very little time for yourself, and therefore we are allowing you 3 working days or 5 working days so that you can make arrangement for the records and then submit that, certify it and submit it as evidence. So they do that as well. So give them a good advance notice to the bank so that the banks also get enough time to prepare those documents. Of course, they prepare only means making copies of those particular books and then giving them some time to verify whether all their entries are correct or they missed out any entries. So checking it with their vouchers if required, any counterfoils if required, and then they will be able to present it to the court also in time. Okay. Admissibility of bankers' records. Yes, when the bank records are called upon for or admitted as evidence, the court may exclude other evidence as long as the entries may available are relevant and sufficient for the matter being discussed. So let us say the banker is submitting the ledger accounts. So the banker is submitting the ledger accounts of Mr. A, mentioning what all debits there are. Debits means whatever amounts there that have been borrowed by Mr. X or whatever withdrawals he has made, vis-a-vis all credits, which means all the monies that are deposited by Mr. A. So the entire journal entries or the journal accounts of Mr. A are being submitted. Now, if the court feels that all I want to check is a certain sum of money which was deposited by Mr. A, whether it is reflecting or not, if I'm able to get that evidence from the ledger accounts, whereby in the ledger account it is reflecting but is not reflecting in passbook of Mr. A, which means I have caught hold of that, what do you say, that particular discrepancy in the ledger account itself. So when I'm able to do that by just submitting that one evidence, then as a court of law, I might say whatever document, the ledger account that you've submitted, that is sufficient. I don't want any other evidence. So I can tell them, don't send me vouchers, don't send me counterfoils, don't send me any other documents of Mr. A. Whatever I wanted, I have got. As long as it's relevant and sufficient, then the court may exclude any other bank's records from being admitted as an evidence. Exemption from cross-examination. The law does not make it mandatory that bank officers who certified the book entries need to attend the court for the sake of cross-examination unless the court specifically orders them to be present. Okay, so for example, let us say this particular Mr. A went to the bank, went to the court and said, I deposited a sum of money and I'm not able to find it in my passbook. Okay, now the bank has taken a photocopy of the ledger accounts of Mr. A, has certified it and sent it to the bank. Right? When it reached the bank, when it reached the court, let us say the legal authority sat over those accounts and they realized that it was a genuine lapse. I wouldn't say genuine, it was a lapse on the part of the bank, because that amount of rupees 10,000 which was a deposit from Mr. A is recorded over there in their ledger accounts. But because there happened to be multiple transactions on the same day, maybe some withdrawals were also there, maybe some safety vault operations were there, maybe some RD creation was also there on that day. So because of these multiple transactions, one particular transaction, which is the deposit of rupees 10,000, has not been done in the account, has not been reflected in Mr. A's book. So they entered the other 3 or 4 transactions in the passbook, but one transaction they missed to enter. So what happens? When they went through the ledger accounts, they found out that this was a discrepancy at the bank's end. So they will, just by looking at the statement, tell the banker, you are at fault. Please immediately credit the account of Mr. A with this 10,000, because we find out that you have not credited this amount in Mr. A's account, which is why it is not reflecting. It is there in your ledger account. So immediately correct that entry and please add on or credit rupees 10,000 to Mr. A. Okay. So what happens is, by just looking at the ledger accounts, if I'm able to find out the issue, then I don't need to even call upon any bank officer or certifying authority saying that since you signed the document, you also have to attend. There is no hard and fast rule. It is not mandatory that bank officers who signed the document should also come for the court hearing. No, they are not required to attend unless otherwise they are specifically called for. right? Like in this case, it is a lapse. So you can definitely call over that bank officer and say, how did you miss such a big amount? For a poor person like him, 10,000 is a big amount. How did you miss to make that entry in his passbook? Why is it not reflecting over here? So if you have any particular queries to ask, any cross examination, anything where you want to give some locus standi and want to ask the banker why this happened or how this happened, then in such case you can call him to the court. If not, the banker is not required to come for any kind of cross examination at the court. Yes, this is the law of limitation. Yeah, I told you that there is a particular law which tells you about loans and loan repayments. Okay, statute of limitations. What is this? Let me just read about this and then I will explain how this law works. Okay, the statute of limitations, the length of time in which the parties to a potential lawsuit can initiate legal action before the dispute in question is considered too old to be litigated. So if, for example, there is what do you say, a complaint. Okay, let us say, for example, there is a complaint of a certain customer on a banker or vice versa. Let's say a banker wants to complain about a customer because he took a loan and he didn't repay. Right? Now, they're saying if you have a potential lawsuit, which means in future, this could become a legal proceeding because right now your customer has defaulted in repaying an installment of a loan. If he continues this action in the future, there is every possibility that the banker can initiate a lawsuit against the customer. It's a potential lawsuit. Now, the statute of limitation is all about the time duration or the time limit within which that lawsuit should be initiated by the banker. If the banker does not initiate that lawsuit in time, then it can be considered too old to be litigated upon. So there is no any fixed time period saying that if a loan of rupees 5 lakhs is defaulted, then what do you say, law of limitation gives a time period of 2 years. If it is an amount of 50 lakhs, then the law of limitation says 5 years. No, there is no such hard and fast rule. And the tenure of limitation can change from time to time. Sometimes it can change even from year to year also. So we have to keep abreast. If we are either the banker or we are the customer, if you want to be known as a well-informed customer, it's your duty to check on what is the limitation duration or tenure for your particular transaction. It'll make sense for you. So what happens over here? Let us say, for example, I've taken a loan, okay, an educational loan of rupees 10 lakhs from the bank because I want to pursue a very good, 1 year degree at an international college. Okay, it's going to cost me 10 lakh rupees as fee. So I've applied to the bank and the banker has given me that 10 lakh rupees. Now I'm going much later in my life. I'm already a working professional over here. I'm doing some freelance work. So I have my own source of income, but it's not sufficient to pay off my entire education. Therefore, I've gone for a bank loan. The banker is willing to give because I'm still working, right? I have some stability of income and I will be able to pay off those EMIs after a year because it's an educational loan. For the first 1 year, I don't need to pay anything. I don't need to repay any EMIs. But after 1 year, they will be willing to take my this thing. What do you say? They will be willing to accept my loan, uh, my repayments, my EMIs. All right. Now, let us say, for example, my first 1 year, that is my period of education, is over. Okay, which means my EMIs will become due now. All right. Now, this is November 2024. My EMIs should start. Okay. Now, I finished my course. I've got a very good job also. I was doing something freelance, but now I've got a full-time, very good job internationally itself. And I'm working there. Okay. Now, for some reason, I did not pay up my EMI for November. Right. So what happens? The banker will identify this, right? I have not paid up my EMI. Then they will obviously ask me what is the reason. They will send me a reminder saying that you need to pay up this loan. And I'll tell them, okay, I've just secured a job. Just give me a month or two. I'm going to pay you. Right? And let's say after that, I don't pay. They sent me 2 reminders, 3 reminders. Right? I didn't pay. Again, after a month, they sent me a 4th reminder. Again, I didn't pay. Right? Now, let us say after 4 or 5 months, they sent me a warning letter saying that over the last 8 months, you have not paid me the loan. So now treat this as a warning from me. Please pay up. So what happens? I don't pay up still. After 1 year, okay, 1 year after the EMI becomes due, right? They send or they try to give me some threatening calls saying that, pay up the money or else this, that. Okay. I still don't pay. Now what happens? After that, the bank gets busy with their work. I get busy with my work. And 2 years have gone by. Right? Bank got busy, bank got more customers, bank expanded, whatever happened. The bank forgot about me for the time being. And then suddenly after 2 years, they realized that, oh my God, this particular person took the educational loan. We sent him reminders and warnings, but he has not paid up. Now let me give him one final warning and then I'm going to file a court case against him. So now they've sent me one final warning, but by then I have sort of lost the whole charm and the, fear of that loan, and I don't pay any heed to that. After that, they go to the court. The bank goes to the court and says, I want to file a suit against Mr. X because he has taken an educational loan. It's been 3 years now, and he has not repaid even one EMI. So what happens? Ideally, you will think as a banker, I have a right to recover my loan. Let me go and file a suit. Now, what if the law of limitations for educational loans tells you that the period of limitation for educational loans is only 2 years? This means that now, since already 3 years have gone by, the court is going to consider this too old to be litigated. The court is going to say the period of limitation on this loan was 2 years. You are coming to the court to initiate the legal proceedings after 3 years, which means period of limitation is over. Now you cannot take any legal action on that person. So as a banker, I have lost that money. I have to write it off into an NPA, non-performing asset, right? Saying that I'm not going to recover this money. It's a bad debt. While for me, who has availed of that loan, there is no law that is going to hold me up and say, pay up that money because period of limitation is over. Therefore, why is this law so critical is so that if you are not paying heed to law of limitation, then as a banker, there might be loans or amounts which you might not be able to recover at all because the period of limitation has lapsed. It's over, it's gone. The court of law is not going to entertain you, saying that for the last 2 years, what were you doing? Why did you not initiate legal action if that money was important to you? He's not paid from 3 years, and you want to take legal action after 3 years about it. Court is not going to entertain you. You had lots of occasions over the last 2 years to come and initiate that action, but you didn't do it. So now you cannot do it. Got it? This is what is the law of limitation. The law of limitation refers to a legal principle which sets forth a specific time frame within which different legal activities, including filing of lawsuits, must be initiated. Okay, it states about the different kinds, or it sets forth time frames. That's why it's called a limitation. It limits the time or the tenure within which certain legal activities should happen. Provisions, prescription of time limits. Okay, the time periods within which one must initiate legal action is specified in the Limitations Act. These time frames tend to vary depending on the type of legal claim or action. So, depending on the type of action, let's say, for example, I want to simply demand recovery of a certain loan, right, which was paid. So, that will have a certain time frame. If I want to demand not just recovery of that money, but I want to also charge interest on interest or certain compensation and litigation charges, etc., then maybe time frame is different. If I want to demand not just a return of the money, but also sale of collateral which has been given to me, then maybe time frame is different. So depending upon what is that legal claim that you have or action that you want to take, accordingly time frames may vary. Also, it varies from time to time simply by gauging the situations around you. If you think that 2 years is a long enough time to pay, give this person to pay back the loan, then maybe 2 years. In some cases, let's say home loan. Okay, home loan, for example, may be taken for 20 years, 25 years, and so on. So in those kind of cases, because the duration of that payment itself is long, I might say even litigation can start even after 5 years or 6 years also. Because I'll say because it was a large amount and the duration of the loan itself was so high. Therefore, even for the last 8 years or 5 years, if you did not initiate legal action but want to do it now, we will entertain you because that was the kind of legal claim that you had to make. Statute of limitations. Okay, the statute of limitations states, it clarifies that once the time period prescribed has ended, the claimant would lose the right to initiate any lawsuit or legal action on that particular matter. So once that time period or that limitation period has lapsed, then the claimant is basically the person who has a claim on that particular amount. He loses the right to initiate legal action. Provisions of the law of limitations, accounting of time. According to the law of limitations, the time period is calculated from the date on which the cause of action arises. Okay, so from when do I calculate that law of limitation, that time period? Okay, now let us consider that education loan. Okay, that education loan I'm availing on the 30th of November 2024. Right? Now, that particular lawsuit tells me, or that particular, sorry, account, that loan account tells me that as per terms and conditions, because you are going for an education purpose, for the next 1 year, you don't need to pay any EMIs. You just pay a simple interest on whatever amount is borrowed, like a small borrowing that you have taken. And after that, EMI will start after 1 year, which means on 30th November 2025, the EMI will start. Right? And then I have to start paying that loan up. Okay. Now, let us say, for example, on 30th November 2025, I did not pay my EMI. So the bank went ahead and in the order of recovery, the first thing they'll do is send me reminders, which they sent me, right? So they sent me one on in the first week of December, let's say, because November 30th I didn't pay. So first week of December, they sent me one reminder, right? I've accepted that reminder, but I have not paid the money. They sent me one on 1st Jan 2026. Again, I didn't pay. Right? They sent me a third reminder on 1st of Feb 2026. Again, I didn't pay heed. Then they went for a warning letter saying that you better pay up. If not, we will initiate legal action. Even then, I didn't pay up in the month of March 2026. They paid me a loss. They gave me a warning. Okay. Now, the question is, after that, they did not initiate a lawsuit till, let us say, November 2026. Now, later on, when you went ahead and you checked, what is the law of limitation for education loans? Law of limitation for education loan, it was given as 2 years. Okay, let us say for the time being, 2 years is the requisite. Now, because I avail the education loan, might think, okay, I borrowed in November 2024. Now it is November 2026, which means 2 years is over. So in December 2026, if my client or if that bank wants to initiate a legal lawsuit, he can't do that because law of limitation is over. However, the law of limitation is not over. Why? Because they're saying the time period is calculated from the date on which the cause of action arises. The cause of action arose only on 30th November 2025, because that's the date when you actually had to pay up your first EMI and you didn't pay. Correct? So that's your first day of default. So from 30th of November 2025, my period of limitation is going to be counted. So on 30th November 2026, only 1 year in the limitation period is over. I still have 1 more year. So in December 2026, if I am going to initiate a lawsuit, definitely the court will intervene and you are going to be pulled up. Got it? Because I'm well within the period of limitation to raise the lawsuit against you. The time period for each action depends on the characteristics of the claim, and there may be exceptions and variations in different types of cases. Okay, this is the conclusion. From both these acts, what do we understand? The Bankers Book Evidence Act is expected to simplify the process of evidence presentation in court. And that's why, if you notice, we said whatever books of accounts are there with the bank, whatever pertains to a certain case that has been complained, the banker only needs to present that much of evidence. It should be relevant, it should be sufficient. They can take copies of those particular evidences. It should be certified by a responsible bank officer, can be handed over to the bank. That is sufficient. That bank officer need not even be present in the court for cross examination. Only if the law calls upon that bank officer that you also need to be there, because it is a serious case or it is an important court decision, you have to be there present, then only they need to be there. Otherwise the bank officer need not even be present during that evidence presentation in the court. Right? So their attention is given to precision, reliability of that book. So what books can be presented, the fact that it needs to be certified, all that is relevant. Both debtors and creditors alike must be aware of the time limits fixed by the law of limitation. So whether I'm a borrower who needs a loan or whether you are a lender like a banker who's giving me the loan, both of us must be aware of the time limits fixed by law of limitation. Okay, and as any default could have a serious legal implication for recovery of debts and settlement of financial claims. So if I'm unaware, like in the case I told you earlier, if I had taken an educational loan and I was under the impression from 2024 to 2026, 2 years have already gone by, and this means that the banker cannot initiate legal action against me, but my understanding of law of limitation was wrong. But the banker has understood it correctly, whereby he has understood that the law of, or the period of limitation has started only on 30th November 2025. And therefore, on 1st December 2026, he is well within law of limitation to go and file a suit against me. Then I am going to be the one who suffers. I'm not really going to be the one who suffers, but my knowledge was wrong. Right? And therefore, I had trouble. But if this lack of knowledge was with the banker, and if the banker actually felt that there was 3 years fixed by law of limitation, and actually he started legal action only in 1st December 2027, thinking that I still have 1 more year, but unfortunately law of limitation was only for 2 years, which actually lapsed on 30th November 2027. And though you go on December 1st, 2027, they will say, sorry, period of limitation is over. So you have to know it so that you're able to recover your debts on time and settle financial claims. This is again a small quiz for self-learning. The Bankers Book Evidence Act defines what? The scope of the act, certification of entries, notice of inspection of the books of accounts, or all of the above. Okay, so the answer over here is all of the above. I'm sure you know that. It's not mandatory for the bank officer to be present for. Is it for certification, maintaining records, inspection, or cross-examination? The answer is going to be cross-examination here. Okay, session outcomes. Yes, through the session, you've understood about the Bankers Book Evidence Act and the law of limitations, how they work. Okay, these are, some cases. As I told you, we're going to also discuss some small cases and caselets relating to banking operations. So I have picked up some two cases for you. We'll discuss at length and we'll see how we can interpret those cases and how the solutions can be given to them. See, this is a small caselet. Caselet number 1. XYZ Bank faced a disruption in its online banking system, causing delays and errors in customer transactions, leading to dissatisfaction. What are the various measures that can be taken by the bank to improve customer satisfaction? Okay, it's like a small caselet speaking about one particular incident, right? It's an online banking system. It could happen to any online banking portal, right? They have some, let's say, a technical glitch has happened, or there is a problem in their payment gateways whereby I'm not able to complete a certain NEFT transaction. And even though I seem to have completed the transaction at my end, I'm not getting receipts for that, or it's not being recorded, or the person to whom I sent the money is not getting the money. So unnecessary delay is happening in money reaching the other end. And also, when I'm getting a receipt, let us say I'm getting a receipt for a wrong amount, or it shows payment made to a wrong payee, etc. So there are some errors, that is, of course, unintended errors and undue delays that are happening and transactions, and as a customer I'm not very satisfied and happy. So if my customers remain unhappy over a long period of time, what would happen? Of course, customer complaints are going to be on the rise, but also the fact we need to understand is, today there are plenty of banking institutions. If I'm a dissatisfied customer with your bank, I will close my account with you and go ahead to another bank which is giving much better service, right? So if a lot of customers do that, you as a banker is going to have problem retaining your customers. Retention, for that key is customer satisfaction. So what all can you do as a banker to improve the customer satisfaction? I've just given some few solutions. One is have a technical upgrade. Maybe the kind of software you have in place or the kind of tools you've put in place are not up to date. They are not abreast with the latest technological developments in the field. It's working too slow under the current systems. So invest a little bit in upgrading the online banking infrastructure so that you have newer systems, newer tools, faster, working software. So, and reliable ones, so that no errors are there and no delays are there. Second, customer communication. Communicate promptly with customers about the issue and expected resolution time. It is found that even when bankers do have this online, you know, uh, glitches, technical glitches that do happen, right? I mean, in fact, a lot of you must have experienced this also in your transactions. If you use online banking a lot, you must have used it for NEFT or any other such transactions. And if you try to complete a certain transaction and it doesn't go through as expected, or if it's taking some delay, there is some buffering and the transaction is not getting over, you will find immediate prompts on the screen, right? Saying that don't press the back button, don't cancel the transaction. It's taking a few minutes longer. Please be patient. Please hang on. So what is happening? This is for us customer communication, right? Where the banking system is proactively telling us it shouldn't take this long. Usually it's taking a little longer than usual. Please stay with us. Please bear with us. Okay, we regret the delay. So what is happening? While that transaction is taking longer, they're also taking care to pacify us and satisfy us, saying that we are with you. Don't worry. Right? So if you are expecting an issue or if there's an issue going on, promptly inform. Some banks, or in fact not some banks, in fact all banks should do this, that if they are going to undertake maintenance of their online banking systems, they usually drop an advance email to the customers saying that on this day from this time to the next day till this time the banking servers are going to be down. So therefore, please do not enter into transactions at this time, or in case you're entering into transactions at this time, they will only be settled the next day after the servers are back in action. Got it? So they are giving proper customer communication. So even though there are glitches or there are certain online downtimes, your communication is not panicking the customer. They are expecting that much delay to happen already, right? So there's no reason they should be dissatisfied. Temporary manual processes where you can inform the customer that, in case you are enacting a transaction of an urgent nature or an immediate emergency nature, then if this portal is not working, please try using the app and try and use this. So they are giving you other means, ways and means by which you can affect a transaction. Sometimes they might tell you just call up the bank's line, and maybe you can try and complete a transaction through that. Or you can have something like a self help kiosk where you can go to and immediately get that money transferred. If the bank branch is close to you, please go there and do the transaction manually. We can assure you that your transaction is going to be completed in time. So they can at least guide you for the alternate mechanisms that you can use in case of technical glitches or interruptions. Also, feedback mechanism is possible, whereby you can establish a feedback mechanism for customers so that they can report transaction issues and provide you insights for continuous improvement. So some customers, if you some bankers, especially if you're long term customers to the bank, keep sending you surveys and feedback forms saying that how would you rate our bank's products and services. In case you say I'm giving it a rating of 4, they will say, can you please elaborate? Can you tell us what specific difficulties you had in dealing with us? So there they might again give you some options and say, did you have non-courteous people speak to you, or did you have technical glitches most of the time, or did you have no help from the banking staff, or did you have delays in your transactions, or did you have errors being reported? So like that they might give you multiple things, and then they might ask you what exactly or what specifically was the issue you faced. So by filling up these feedback forms also for the banks, you are giving them insights on how they can continuously embark on a journey for improving the transactions and carrying out their work. Okay, this is another caselet that I have put in. Okay, ABC Bank recently experienced a series of fraudulent activities, including unauthorized transactions and identity theft, both affecting both customers and the bank itself. So I'm sure by now you are already aware of what is identity theft, what do you mean by unauthorized transactions, what is fraudulent activity and phishing and all of that. Right? And you understand that these kind of transactions impact both customers and the banks. Okay, so the questions here are, what are the types of fraudulent activities mentioned in the case? The two kinds of fraudulent activities, I think what we see here is unauthorized transactions being affected and identity theft is happening. Okay, how can the bank enhance the security measures to prevent unauthorized transactions? Okay, so unauthorized transactions can be prevented by making your payment gateways more secure, by adding layers and layers of protection through OTPs and authorization passwords and all of that, right? So enhanced security measures, multi-factor authentication. This is what I told you, adding more and more layers of authentication, and regularly update your security protocols, right? Ensuring that, firewalls are there in place. The system is made hack proof, right? So that people don't enter into the system like that, right? That is one thing. uh, they can also ensure like OTPs, for example, that you don't share your OTP and PIN numbers with anyone. Okay, this is all, guidelines that the banks keep reminding you about, right? That for your own safety and security, don't mention your OTP, don't allow your account to be hacked, don't pass any important password related information to anybody, assuming that it's the bank who's asking for it. Okay, what steps can be taken to educate customers about online practices and phishing awareness? So even before that, as an enhanced security measure itself, you can also engage in employee training and monitoring. You can ask, or you can keep your employees on their toes, right? And ask them to follow ethical practices when they are accepting money or when they are paying money, ensuring that each and every transaction is properly recorded in the books of the bank. And they're not missing anything. Also, they should be able to monitor and identify if there are suspicious transactions happening, any kind of fraudulent activity, somebody has smuggled cash and it is reflecting in the bank account, immediately intimate the cyber cell, right? Or if you identify that there is some, the pattern of your transactions has suddenly become erratic, where you are not maybe a regular transactor at the bank, then they can be trained to monitor and identify such undue activities that are happening on your account. So how can you educate customers on it? You can educate customers on it by you know uh, sending them emails, by asking them to monitor their accounts on a regular basis and check if there are any unusual transactions they're coming across, any kind of uh, what do you say, anything that they feel is not what do you say, actually a transaction entered into by them, an unauthorized transaction for that matter. Okay, collaborate with the law enforcement authorities. Okay, work closely with them. Don't assume that the bank's problems, the bank only will sort out and then we will not inform law enforcement authority. Don't do that. If you suspect anything suspicious, if you find that there's any erratic pattern, which of course you will discuss with the client first. Okay, let's say for example, I get only regular salaries into my accounts, which is 50,000, 50,000, 50,000 every month. And suddenly in the month of December, there is rupees let us say rupees 30 lakhs that is gets deposited into my account. And that doesn't mean that the bank will immediately call cyber cell and say, oh my god, look at this transaction. The first thing they should do is call me and say, we identified some unusual amount of transaction in your account. It was this you, right? So you can say, yes, it was me, you authorize it, right? Saying that no, it was me. Maybe it was an inheritance that came to you, or maybe you had a plot of land which you sold away and that's what you have got the money for, which is deposited into the bank. There is no reason to involve or collaborate with law enforcement. But if you find out that there are some nature of suspicious transactions, let's say two three such transactions happening neck to neck, and they're happening in such a way that it's causing some suspicion to you, right? So in such case, please investigate. Ask the customer. If the customer also denies that he's unaware of anything like this, then of course, intimate the law enforcement agencies and involve them about the fraudulent activities or something like that. Okay, so that's it from me for today. Okay, I'm going to stop sharing the screen for a while. Okay, and yes, so if there are any doubts, okay, you can ask me.